Hello, everybody. Welcome to the first episode of the More Knowledge Show, coming to you live from a garage somewhere in Alabama. Anyway, so I guess this show is kind of what we're doing to replace the old stuff that we did, like the walk to work stuff and all that. So the purpose for the show is to look over stuff that's happening in the world and try to understand it and look at it through a different perspective. And a lot of the stuff that we're going to talk about is stuff that it may not be as talked about in the mainstream news sources, so it may be underlooked, and we need to really get the full picture so we know exactly what we are preparing for and what we need to protect ourselves against, because it's a lot of threats out there. It's a lot of very serious threats. Like, some of the most serious threats are not really being talked about all that much. A lot of the stuff that is talked about and put in front of us are really just distractions. So like, a lot of times these big companies, like, let's just say, I don't know, just any news company, like, they'll cover pretty much everything that goes on, but they're not going to put a big emphasis on everything. So basically, like, I couldn't say that the companies have never talked about a certain thing, because they could probably just go back into their history and just show evidence, like, I did talk about this, even though it really was insignificant because no one really heard about it. But we are going to anyway, I don't know if anyone really understood that. I'm still trying to get better at talking. But anyway, the point I was trying to make is that, yes, while all the stuff that I might talk about is being covered, it's not being emphasized proportionate to its actual importance. Okay, so anyway, so right now, I guess it's episode 1. That's our introduction. So first topic we're going to talk about is every single week, and it should progress subject. It is the trade war each and every single week. A lot of people have talked about this, and people have say, but I don't think it's very well understood the true impact of the trade war and what it could potentially bring. And the fact is that a lot of times, a lot of the stuff we hear from the president or people on Twitter trying to make it, constantly put in some optimism, but really, there really is no reason to be optimistic, because there isn't a lot good to look at. Because right now we're in a situation where America, we really can't back down from, well, I guess we could back down, but we probably won't. And the thing is, but we also have an election coming up. So it's either, but if you look on China's side, China does not have elections. So China could pretty much do whatever they want to do. And China isn't worried about, like, China is willing to go to war with us. China, they're calling us out. China has said multiple times that, they're not going to back down from any sort of American pressures. And originally, in the beginning, the president and a lot of his people were trying to tell American people that, you know, America, we had the higher ground in this conflict, and we could basically use our power to try to pressure China into just falling into anything that we want. But it turns out China is not going to kneel down to us, and the result of this is we're going to have a stalemate where the two sides will not come to agreements. And throughout that time, as we continue to try to pressure them and they continue to just take that pressure, it's going to be it's going to have a lot of terrible effects for the economy. So, you know, a lot of times you may hear on the media, like, you know, it's going to happen, a resolution is coming soon. I mean, it was supposed to happen a long time ago. It was a large reason why the stock market, it was up for the first part of 2019. But, you know, as we can see the past few weeks, the market has been starting to price in the effects of this trade dispute. And, you know, there's been talks of, you know, there's so much uncertainty, but if the tariffs continue to add on, and we do add 25% on all the other Chinese goods that we haven't taxed, which is what's going to happen because it's what we promised. I guess they could hold it back, but I mean, eventually it's probably going to happen. And if we do, then it's a good chance we end up in a recession as close as like 3 quarters from now. And, you know, all these things are making it hard for something like the stock market to move up, because, you know, a recession means things are contracting, and if the entire economy is contracting, so are corporate earnings. And if earnings are falling, then stocks are falling, because stocks move with earnings, at least they're supposed to. And so yeah, so it's really what we're kind of seeing. We're kind of seeing it's like you know, the president, he's trying to reassure people that America, like, we have the high ground in this situation. But at the end of the day, the evidence just isn't showing that. Like, you look at the farmers, farmer sentiment is at its lowest level since October 2016. And you know, also, like, you look at the soybean sales, it fell 74%. So the effects are a lot bigger than you know, just the farmers. It's in everywhere. It's hard to plan if you're a business. It's hard to make plans if you're not sure about what's going to happen and the outlook is getting worse. So then what's happening is companies are holding back on their spending. When the sentiment is low, there's less investment, and overall the economy just slows down. And because of this, it's a good chance that we could actually end up in a recession if this continues. And, you know, another thing is that, you know, and they'll try to convince you how the tariffs have been having a positive effect because the American economy is just so strong. I mean, just here's something else. A study on the tariff on the imported washing machines, which came in January, it showed that 1,800 jobs were created, but the added cost of the tariffs were like 1.5 billion dollars, which basically means that for each job it costed $115,000. So, you know, they're going to try to make it seem like we're winning to try to keep confidence up, but at the end of the day, the actual numbers, the actual results show people are struggling, sentiment is low, capital investment is low, and it's not efficient. The results are not efficient. So, you know, like, they may try to point to it's going to bring back jobs, but if you look at the costs compared to the amount of jobs that we're actually going to bring back, it's negative. It's negative. Like, we are losing, everything is slowing, and over time, this is going to be bad for the stock market and for the global economy. So yeah. Anyway, but and the thing is that he's trying to expand this game, instead of just having this between America and China, he's also trying to do this with Europe, and he's opening up to other countries with these tariffs and trying to use it as a tool, but it's not working. There's no evidence that it does work, and the bigger it gets, the bigger the eventual problems will be. So currently, as we can see, the trade war is, it's destroying the sentiment, the confidence, and the overall outlook for the economy, which affects the stock market and overall expectations for economic growth. Economic growth is, if the trade war, it could cut up to, it could have a large impact on the GDP numbers. And the thing is, the economic growth numbers are already projected to be slowing. So even without the trade tariffs, it's already slowing, but it's only going to be further pushed down if we continue to go down this path. And all this fear is really being shown a lot in the bond markets. The 10-year yield has dropped to its lowest levels since like 2000 something. The yield curve has inverted pretty. It is inverted. It is inverted. And if you do not know what that means, which you probably should, it means that the interest rate on the longer term bond is actually, it's lower than the interest rate on the short term bond. And in a normal economic environment, you would not see this, but we are seeing this. And usually it's just something you would see before a recession happens, and it doesn't cause recessions, but it's a good indicator of recessions. And the yield curve did invert in March, but a lot of people were saying that it was just a false flag. But how the yield curve, it seems a lot more serious, and part of the reason, if you look at the credit spreads, which show the separation in yield between the high yield bonds and investment grade bonds and treasuries, because if you see the difference between that, if it's tight, that means that there's still a lot of confidence in the economy, and supposedly these investments are considered to be safe and strong investments. But as they start to widen out, then that means that there is more risk in taking these investments, and that's usually a bad sign for the economy. So what we're seeing is that some of the credit spreads are like the widest that it's been this whole year, and at the same time the inversion has been going on for a while. And the longer the inversion goes, inversions of more than a month has foreshadowed a recession pretty much every single time. So as the credit spreads continue to widen out, high yield spreads are up 70 points, and the investment grade spreads are up 20 points. And as they continue to widen and the if the curve continues to stay inverted, the chance of recession is basically 100%. But for right now, if you look at the spread, it's negative 0.28%, and historically, it isn't terrible. If you see this chart right here, it's going to show that around that area of that spread, it generally means only a 30% chance of recession, which isn't incredibly high. But if the spread continues to get bigger, and it goes farther into the negative territory, the chance of recession will continue to rise. And for right now, with the inverted yield curve, it signals a few things. It signals low inflation expectations. It signals interest rate cuts, and it signals a slowing economy. And all these things seem to be coming true. It's being shown in the all sources of information are basically showing that the yield curve is coming true. And right now, the chairman of the Federal Reserve has basically said that, is basically hinted that interest rate cuts are coming. So it does seem like the bond market is correct. So we probably should be worried, because historically it's been correct, and right now it's showing pretty bad signs. So if you're still optimistic, then you either haven't been hearing all the right information, or you've just been closing your ears, because it isn't a lot of good things to look at right now. It really isn't. And yeah, it's not looking very bright. Let's just put it like that. So anyway, that was the first episode of the More Knowledge Show. I struggled talking for majority of the show, but I don't really want to constantly have to do a take every time I struggle talk. Usually I will stutter a lot when I'm trying to think of what I'm trying to say, but I think over time my speech will be a lot more clear. And right now I'm just trying to get into a rhythm. I'm not expecting them to be amazing at the beginning, but as time goes by, these shows will get longer. They'll have more information in them. They'll look better. They'll sound better. And for right now, you hear a lot of animal noises and birds and stuff like that. It's because I'm outside in a garage. But anyway, that was the first episode. As things continue to happen, we'll have more stuff to talk about. In fact, there's actually a lot of stuff to talk about right now. I'm just trying to get started and get a YouTube video out there. Anyway, like, subscribe, share, comment. Click the link in the description for my website and my Instagram account. Anyway, I'll see y'all soon. I'm out.